Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 25th of June 2024. After hitting a record high in May, gold has basically consolidated its gains that were made earlier this year. And on the whole, it has managed to hold above 2,300 support level. The consolidation has occurred around the 161.8% Fibonacci extension level of the last significant downswing that took place between August 2020 to September 2022. And the consolidation has allowed the relative strength index, or the RSI, to work off its extreme overbought conditions, mainly through time than price action, which is actually a bullish sign. Now on this time frame, you can see that gold has been stuck inside what looks like a bull flag pattern, which is a continuation pattern. It needs to rise above the resistance trend of this pattern to the upside to trigger a fresh bull signal. And although it did create such signal on Thursday of last week, this was immediately followed by a sharp sell-off on Friday. So we need to see evidence that this was not a reversal signal and that it was a bear trap signal, another bear trap. We've seen several bear traps in this bullish trend this year. So if we now go on to break 2,365, which is this resistance level right here, I think that would be the nail in the coffin, so to speak, for the bears. So for me, a move above this level is now needed to signal the resumption of the bullish trend. On the downside, we have a couple of support levels to watch. This is 2,325, this thin blue line, which was previously support and resistance. A more significant support is obviously this level right here at 2,300, which has been tested on a number of occasions, and so far it has held firm. Below that, we don't have anything significant until the support trend of this bull flag, which could come in at around the high that was formed in March, on 21st of March, at 2,222, depending on how fast or otherwise gold will get there, if it does at all. Now, similar to gold, silver is also stuck inside a continuation pattern, a bull flag, and it has struggled to maintain the breakout above the key $30 level, which is a massive level of prior resistance, as you will see when I share the weekly time frame in a minute or so. But essentially, like gold, it needs to break out of this bull flag pattern to the upside to trigger a fresh bullish signal. It's also worth keeping an eye on this bullish trend line, which has been tested on a number of occasions now, and so far it's held above it. It is possible that silver could break this bullish trend line momentarily before resuming higher, but for as long as it remains inside this bull flag pattern, I think the path of least resistance remains to the upside. Now, if we zoom out and look at the silver chart on a weekly time frame, you can see that despite the short-term noise, the trend is quite healthy on this longer term time frame. You can see that silver had spent 3.5 years in consolidation before breaking out above $30 per ounce. This level needs to hold now as support. It's not 30 exact, it's between 29 to 30, the shaded area here. So that area needs to hold now as support before we see a continuation to the upside, a potential continuation to the upside, as I had previously envisaged in this growing right here. So far we are looking at something similar to that, with weekly price candles remaining inside a continuation pattern. But let's see if silver will now hold this area and lead to a fresh breakout. Meanwhile, the RSI has worked off its extreme overbought levels, which is a positive sign on the weekly time frame. So the conditions are there for silver to stage a potential breakout and head higher in the months ahead. Now, for more market analysis and insights, make sure to check out the news and analysis section at cityindex.com. I will see you in the next video. Take care.